I'm going to be making a lot of videos this weekend covering symbols and things that I don't typically get to, like GLD, the TNX, SPX, those sorts of things. And I'm going to be trying to figure out this audio visual delay that I have. So I just want to round back to Bitcoin really quick and then also talk about Ethereum. Looking at the daily chart of Bitcoin futures, you're going to see a descending broadening wedge in blue, and this is what I charted yesterday, but I need to correct it. I'm going to explain why now. We have the price cutting through a trend line, which Bukowski says is a no-no. I thought I could just use a prior candle's low, but actually I think what I need to do is drop this trend line to the bottom of that wick and just deal with the fact that I am subject to bias too, and was probably too hopeful when I was charting last night. When I take the height of the drop from that ascending triangle to its target, and then I apply an equal measure from that level downward, you're going to see that if the price were to follow this bar, we would easily get that fifth touch point that we need, because I'm thinking this is probably just 1 and 2 on the top, and our first 2 on the bottom, but we're still looking for that fifth touch point. And this being a measured move down with a half staff formation, or not even a measured move down, but just a well, it's not a vertical run down. It really is a half staff formation, I think, that we have here with this consolidation. And that this pattern will lead to our fifth touch point on the descending broadening wedge, which makes sense because the MACD looks like it could still go lower, of course. I mean, the RSI is so oversold, but it's still at 23, so it still could drop further. And the averages here are so poor that it's just not making a dent. And I just wanted to pull up the Bitcoin price chart. You can see that it is coming down below 19,000 now. So the touch point that I'm looking for here is actually towards 15,000 or 16,000. So that's my corrections to the analysis I made on Bitcoin yesterday. So I want to just get that out of the way. And now I want to move into Ethereum. I was looking at Ethereum as well. I want to cover several different coins and cryptocurrencies, tokens. And this is what I have for Ethereum. It's just the same story where we have a really big broadening pattern here. And it looks like Ethereum futures have already touched down here with 2 touch points at the beginning. This may be a touch point. It's not quite close enough, is it? I would have to tighten it up. Pull this down. That looks crazy though. That's crazy because look how narrow it is on the left hand and how wide it is on the right hand side. Touch at the top, 2, 3, 4. This could be 5. It's very similar to Bitcoin. It really is. But I have a hard time with the way that pattern looks. It's not very visually appealing. Maybe there's a downward channel through which we're traveling at the moment. Wouldn't it surprise me to see a bounce in Ethereum at this point and form some really ugly kind of like nonsense price mirror. Something wacky. I mean, the charts all look wacky to me right now, to be honest. This bear market is just nuts. So while we're here, maybe we actually go to Ethereum too and see where we're currently at. Let's have a look here. ETH. Tell me, where is Ethereum at? 986. Okay. So that would put us, let's see here. We still have a ways to go before we re-encounter that trend line on the broadening wedge. So yeah, I think that's probably looking good is we have this descending broadening wedge in Ethereum as well. And it's just got such a more extreme range within the pattern, but that means that the bounce will also be more extreme as well. I want to talk about how the cryptocurrencies are correlating with equities markets. And so to do that, I've actually taken, this is the SPX, and I've overlaid, I think this is Bitcoin. Yeah, this is currently on Bitcoin, and you can see that it's pretty wild that Bitcoin does not really seem to have much of a correlation when it comes to percentage gains and losses because it's so much more volatile, right? So what I can do is I can make a correlation chart down here, and it's currently set to Ethereum futures, which is not what I want. I want Bitcoin, please. The Bitcoin futures. Apply. And I'm going to drop a price level down. I don't really remember where I saw it on Bulkowski's website, but I do believe that a correlation above 80% is considered high. So I'm going to go ahead and throw that down, and you can see that typically when the correlation between SPX and Bitcoin reaches 80, there's a reversal in the correlation. So there's a divergence in the price action. There was a period of sustained correlation through here when the markets were kind of finding a corrective top. See, the all-time high was back here. Then we had this dump and a corrective bounce. And during this corrective rally, the correlation was quite high. And now we see that the two are moving somewhat together, but it's just the percentage drops in Bitcoin are so much further and stronger than in SPX that this correlation just falls apart, right? So very, very interesting to watch. Why would these two things seemingly follow each other, but one be far more volatile than the other? I mean, it makes sense for the cryptocurrencies to be volatile, but I don't understand the correlation with the equities markets. I think a lot of this changed for the cryptos when the futures and the derivative products started to come out, when the banks started getting involved with the cryptocurrencies. It really did change the dynamic of the marketplace, and I don't think that's going to change. In fact, it wouldn't surprise me if there was an active effort to try to get as much crypto out of the hands of retail traders as possible, because blockchain technology, I believe, is the future. And this is a direct threat to modern financial institutions if they don't have large stakes or control of that supply. Okay, so I've covered that correlation between SPX and Bitcoin, and it looks very similar for Ethereum and the NASDAQ. It's pretty much the exact same story. I already did that, so I don't want to go into that again. I've talked about my correction in Bitcoin, and I'm going to go ahead and get into editing this video. Hopefully I can fix these issues I'm having in post-editing. I really appreciate everyone's patience with me while I go through this. I'm not a YouTube influencer. I'm just vlogging, and I really appreciate your kindness and willingness to get through this with me. And yeah, and just acknowledging too that this is hard to do because no one has a crystal ball, right? So I'm going to be trying to think about how I can make my analysis less bias directed, so it doesn't matter which way the price goes. The technicals will show how far or the extent of each move and what those probabilities are. I also wanted to start getting a program schedule going, so on certain days of the week, I'm doing certain videos covering different symbols or different kinds of content. This is all coming down the way as I am free from worrying about my day trades. So of course it's the weekend, there's no trading, but hey, I can still trade crypto if I wanted. Okay, so I'm gonna get out of here, go see a movie or something, and enjoy the rest of your weekend, and more videos are coming. Happy trading.